You know, and I'll tell you how rich they are. You know, there's a country, Ivory Coast, Côte d'Ivoire, if you speak French, although my French accent sucks. But we bought this paper in 2009, 8, when somebody was going, some of the hedge fund was going under, at 9 cents, okay? 9 cents. And they had 2 civil wars since then, and they haven't been paying. They're just going to make their first coupon, I think, this month. That paper has a 6 handle on it, a high 6 handle, okay? High 6 handle, 6%.
Right.
Okay, I saw a piece of research a company really liked, Goodyear Tire. It was a credit research, and they said they were saying you should underweighting this piece of paper. So how do you underweight Goodyear? It's a nice credit, it's good credit. I like the credit, and then I didn't realize because we don't own a lot of stuff. It was trading with a 5% handle
versus the Ivory Coast at 6%.
But there was nothing wrong with the 5%. I mean, 5% is again pretty. Now the spreads are not rich. Are not bubble, but the spreads are there, but the interest rates are so low, but the absolute yields are so low.
So you shorting this stuff?
No. I would short with $1 trillion of stimulus, the Fed coming in and short. You could short it if you want. I'm not going to short it, okay? Because something that maybe is rich, it's not bubble, will go bubbly. Okay, so you got to figure what will happen. This money has to go someplace, so it can either go and make that 500-something spread trade. Now, remember, that 500 is a yield, so the spread is still on a 7-year piece of paper. It's close to 500 still, which isn't a wrong junk spread necessarily, but the absolute yield is kind of crazy. Now, there's an interesting thing with junk, right? So if you got enough junk and you got junk trading at 6%, and you want to say, okay, I got junk at 6%, well, heck, that's like a 16 PE on this crap that has it's not crap, by the way. Some companies are very good companies, but that have a limit to how high they can go because they're bonds and they have calls and everything else. So they're actually higher than that. So I can look at that and I say, okay, this stuff is there. I'm afraid to short it because I think there's a lot of stimulus. Right. And then I'm looking at the stock market. Okay? Geez, that other company, Bloomberg, that does the stuff that we don't talk about on this TV, you look at their screen and you look at next year's PE. You don't have Bloomberg stuff here. You should have Bloomberg. Just get them.
You mean the machines?
The machines,
but
yeah.
You can't have them.
You should have them.
They won't give them to us.
I'll pay it for it.
No, Bloomberg won't give it to us.
They won't give it to you?
No.
Come on,
We're
love.
competing
Love around this country should be the byword today.
You're right. They won't
Bloomberg. Macy's. Did you ever see the miracle on 34th Street, Bloomberg? Give CNBC Bloombergs.
But tell me where you were going.
Okay, so where I was going. I'm sorry to digress for a second.